Hello, everyone. Welcome. You get the James Pelton Saturday morning hair. That's what you get today. Saturday is more of a relaxed day, so I don't shower before I get on stream. But here with a good friend, I actually got to go to Malaysia to meet the KERC team. And so we're just having KERC on. I put a whole bunch of money into KERC because I love what they're doing, and we'll talk about that. And just kind of doing some updates. Just want to see what's going on, how things are going, how things have been going, what are the struggles, what have been the successes. So we'll talk through all those things. What I need from you guys in the audience is first hit the like button. That is the currency of YouTubers, and we appreciate it. I'd rather you do likes than even send me USDC. Okay, I prefer likes to USDC. So appreciate you guys doing that. And if you have any questions about KERC, what it is, or maybe you have an investment in KERC and you have specific questions, feel free. This is the time to get them all out. Again, don't ask me later. Ask now while I have the expert here on. So without further ado, let's do a quick introduction. Tell us a little bit about you, how you got here, just briefly. Then we'll talk about KERC, and then we'll go through some updates.
For sure. Hi, everyone. My name is John. Definitely, maybe you guys see me in the past videos. Founder and lead of KERC. What we are is essentially trying to decentralize healthcare and health records, and we just have a different approach to how everyone else is doing it. Right now, we have just moved into a new development cycle, and happy to speak to James more about it.
Awesome. Yes. Good to have you, man. Good to. I got to get back to Malaysia and spend some time with you. I think about what was that food that we had that's really popular in Malaysia, like the milk and rice and what was that
Nasi
called?
lemak.
Okay. Yes, that was good. I think about it. I'm like, man, where do I get some of that? There's nowhere to get it here around Lincoln. So, yeah, awesome. So you kind of touched on it briefly, but give us kind of an elevator pitch of KERC, what you guys are looking to do, what's kind of the big picture, and then we'll go through some specific updates of how things.
Yeah, for sure. So, KERC, if you guys have been here a while, and as you've seen, we've gone through a whole rebranding. KERC is a real world asset business as a whole. We started off focusing on general practice clinics. That's where we sort of started to move our whole MVP cycle, because essentially what we always wanted to do is move into digitizing health records and fractionalizing health records. And how we sort of wanted to go about there is essentially started with GP clinics, and owning GP clinics ensure that we own the healthcare data that's with the GP clinics and their family owned. And this also ensures that we are able to give a return to our investors. And this means that it's a project that is profit generating. It's not a project that is based on speculations or anything in that sense of tokenization. So we are considered now, the hot term is real world assets. We own GP clinics. We have 3 under our arm right now, and we are essentially moving into even more of a bit of a traditional finance segment, where we are grouping and doing a merger with clinics to essentially go out for a better exit. And this allows us to then generate more profits to acquire more clinics, which also funds our roadmap when we are building our own layer 2. And that's what we'll be very excited to share about in terms of where we are going.
Okay, very good. Yeah, no, I love this. Again, I love not Ponzi-nomics. This is an actual business bringing in actual revenue. Maybe talk about how things have gone since what have been some of the challenges since you guys launched. You know, you launch and you kind of have a plan for here's what we're going to do. So how has that plan gone? What have been the challenges? What have been the successes? Do you still feel on track? Are you kind of pivoting? Tell us a little bit just about that journey so far.
Yeah, so initially, as we were going out the whole process, we realized that if we were just to focus on assets alone, there would be not enough development cycle runway for us to sort of move into our own layer. As we were developing our private layer to ensure that healthcare records can be transferred into clinics and into facilities in that sense. And so we had to sort of pivot away from focusing on the tokenomics so much and tokens as a whole, and focus on the assets that we have at the end of the day. And I think everyone wanted to move away from that speculation, especially after the little issue we had with CoinStore. So that was one of the biggest challenges we ever had, I would say, because listing on CoinStore initially was sort of a place and position that we wanted to ensure that we have liquidity and we essentially have an exit for people who sort of either buy on the OTC or looking to sort of get into KERC. But due to the inflationary issue and some little debacle where there were some tokens that sort of went into the exchange before we were ready to sort of launch it out to public. That caused a massive issue, and we had to relaunch the whole token as a sense. So in that whole process, we are also pivoting towards, like I said, moving away from that token system and moving into asset focus. So what this means is that we are doubling down on our 3x pool. What this for that essentially is because we're going for a merger exit, a traditional merger exit. So we are realizing the value of the assets that we're getting for a lower value towards a listed company. So this means essentially there's a quicker exit, and this is how we can ensure a 3x return rather than the traditional, like, speculative, like maybe we'll 3x in a sense. But that is a process in terms of a very traditional process where, because of the share offload when you merge with a listed company, and there's also a process where you cannot sell everything at one go. That's why there's a time period and there's a lockup period for that 3x pool. But we're pushing towards that as of now. And moving forward, so we're going to start shifting our pools into more asset focus. And see, because we saw sort of that working, and we saw a lot of feedback that people saying, hey, look, I want to own an asset myself, because that's sort of where the generation of wealth sort of comes from. But I don't have enough really to sort of buy one asset myself. So can I sort of like pool together with other people? And I think that is sort of what makes us more lucrative in that sense, and also gives a bit of, I would say, traditional concept to what we are doing in a sense. So it sort of becomes like a REIT indirectly in that sense, but you are not looking at rental income, you're looking at a business income as a whole. So moving towards that whole real world asset component is where we are heading towards, and moving the new pool so that we can officially open our deposits on CoinStore. So that needs to sort of make sense and align properly in a sense, because obviously we don't want to just create and open it up and then the price goes up and down for no reason, and then it hurt everyone. And that's the main reason why, because especially when we want to start moving our token into a gas system, because when we convert KERC into using it as a gas chain in a sense, we need to be able to have I would say a stable price action in a sense.
Yeah, can you talk a little bit more about that? That's really interesting. Talking about, I know we talked a little bit about it on our last video, but using KERC as a gas token. I think some people have asked me, hey, what do we do with our KERC tokens? We have all these KERC tokens. What's going to be in store for them? Do you want to talk a little bit about that and going forward what the plan is?
Yes, for sure. So when we started exploring down into the whole concept of how do we fractionalize and digitize health records, everyone has sort of like a solution, but no one really had an adoption plan like we did. Because at the end of the day, you can create the technology and you can create the infrastructure for clinics and for healthcare facilities, but if no one's going to want to use them or no one's going to want to adopt them, it's just at the end of the day there for nothing. So I'm not going to say we are the only ones sort of doing this, but the approach we are is in terms of we are essentially buying our own users and our own infrastructure while also being able to generate a profit. Because when you talk about general practice clinics, the health records are there for at least 7 years at least in Malaysia. The law requirements is the clinics need to hold those records. So whenever we acquire a new asset and when we move into a new asset, we have about 7 years of health records there for us to interchange and intermove around in our own ecosystem. And so as we start exploring in terms of different chain and how we want to structure the whole ecosystem, we realize that we need to enable a seamless plug and play process rather than reintroduce a new infrastructure to all the other hospital and clinics. Because when you're talking about transferring health records in hospitals, which they are hospital management systems, they already have integrated with their MRI machines, CT machines, and these hospital management systems are run by Siemens and all those manufacturing machines. And there's no way you're going to get a hospital sort of like, hey, let me use your infrastructure to store my health data in a sense. So we essentially needed to be a plug and play system where we can integrate with those systems, and they can essentially use our chain as a reroute to fragmentize their health records, and so that it gives, number one, power back to the users, and it also fixes the whole inoperability issue where from one hospital to another hospital or one clinic to another clinic, you can't move your health records because they don't share the same infrastructure due to HIPAA compliant issues. And now this allows everyone to sort of share that health record through our API and our app in a sense. So in this process, obviously, when you do anything on the chain, even though it's private, you still need to have, in terms of like the gas token and the transaction token, to sort of validate that whole process. So this is where KERC is sort of heading towards, and we are essentially moving towards that tokenization of becoming a sort of DAO. So the KERC token you know now is probably a version 1. What it's going to evolve into, I cannot finally say now, but we do have an idea of where we want to head towards at the end of the day, because as we explore the different layers, because the issue is that when we started going to different chains, we realized that there are limits in terms of what we can do and cannot do, and especially we want to be a private chain. We need to basically fork off them and create a very, I would say, closed channel, while at the same time being able to allow master key users to sort of get their health data and call their health data in that sense. And so this also sort of sparked us into a space where we realized that by fractionalizing health data, we can actually start saving hospital server space as well. So this was one of the biggest incentive for some of the people we're talking with. And this is the first phase of the infrastructure that on the roadmap that I'll probably go into a little bit down the road where we're heading towards. Yeah.
Okay, yeah, so quite a undertaking to, like you said, try and get, hospitals and to move over to something. It's hard to get big things to move. That's kind of the nature of business. So how has that process been, getting people on board, or like you said, getting those third-party systems that are already integrated into the hospitals? What's that process been like? Have people been open to that? It's something where people recognize, oh yeah, this is great, we need something like this, or what's that process been like?
Yeah, so we had the framework in mind in a sense of what we want to build, but we're still exploring in terms of how it will sort of work on different chains. We explored already a few chains as well, and we're testing it with our clinics essentially right now. So that is where we are sort of seeing ourselves but at the same time, when we are speaking to hospitals and we are telling them, look, if this is the infrastructure that we do not sort of come into your ecosystem and stir shit up, because the issue is that they don't want to retrain people. They don't want to add extra costs at the end. They don't want to sort of have to re-download a whole new thing. So for us, it's more, we're talking to some CMS guys, clinic management system guys, and some HMS system guys, hospital management system guys. And we are saying, okay, if this is sort of the infrastructure, what would we need to build? So this is where our phases are coming down in the roadmap. So we are going to let our traditional business sort of run in that segment, and that's why the focus was more on the 3x pool rather than the hard sale. We're trying to move away from that because we realized, like, look, let's focus on the development rather than focus on the business, because the business can run on its own right now. It's running steady, it's running fine. We've been paying out for 7 months now. Everything is okay. So we want to make sure that now we shift our focus back to what we essentially always dreamed of doing. And that means that we are going to start building our own private servers first for clinics that we have. This will set the foundations to us to test our storage system and how we are able to transfer data in a blockchain private manner. So this will sort of make us like an AWS in a sense, but more of a testing ground for all clinics and what we have. Then we're going to start integrating it probably with the hospital systems and the clinic systems, so that we can see what will work and what doesn't work. Because when you're undertaking so much data and so much volume of information, you need to start seeing how we can sort of marry that. So there's going to be a lot of problems coming along that. Then the second cycle where we are going towards is probably the API and how we can make that into our own app, so that essentially you can go to any clinics or facility that sort of partner with us, have the app where essentially your wallet is going to be able to pull your health records. So whatever that's linked to your wallet, your ID, at the end of the day, your health records is going to be able to pull this to you immediately. We do not have access to anything. So now self-custody is the whole game of what you're doing. So privatizing all of that and testing that would be the phase 2. And the final phase would be then anonymizing and monetizing. So what that means is that because essentially since we've already anonymized and privatized all the health records, now we need to start moving towards monetization. And what that means is that if the patient does opt to share their health record or want to make some income off their health records, we are able to then compile all of that information and essentially generate a report. So this means that we are able to start selling this information to pharmaceutical guys, hospital research in a sense, and you are also able to make an income based on the profit generated from those reports at the end of the day. Because with this, we are able to start moving health policies in this process. Because what we've realized is that a lot of facilities and a lot of hospitals and everyone actually wants to know sort of where health is moving. So, for example, if you have information of patients who are facing higher diabetes in a sense, or higher blood pressure in a certain area, then you can start looking into different reasons of why, or maybe you can start looking into exploring different drugs in that area. So this is what the insurance company and pharmaceutical guys are sort of looking at. And based on our conversations with them, this is where the good feedback is. And this is where we are sort of heading towards our development cycle.
Okay, no, that's good. I love that. So for existing token holders, what would you recommend for them? Just sit tight. Is there kind of a timeline on some of these things? And we're not going to hold you to it. I understand dates get tricky because then, oh, you said it was going to be July, or whatever, and then that's not how business works. But what would you recommend for token holders? Just kind of sit back, just stake, or what would you say to token holders right now?
Yes. So in the previous AMA, we sort of went over what we are going to do in a sense. So because at the end of the day, the inflation of tokens is going to be more than the profits generated from the clinics that we have right now. And right now, we want to ensure that the OGs and people who sort of came with us in the very early stages get the APRs that we sort of promised you guys. And we want to make sure that we cordon off the new guys that are sort of coming in, because the moment we start implementing the allowing the deposits from CoinSaw and other places as well, the issue is that there's going to be a run because we are pegged to the price that we are sort of setting. So that means that we want to ensure that the OG guys are always protected in terms of your profits. We want to make sure that most of the profits are always given back to the OG guys rather than the newer guys who are going to buy in for cheap and then come in and essentially sort of make a profit run, and basically to start pumping up the percentage month on month. Because at the end of the day, if we sort of take out the whole inflationary segment of where our tokens are at right now, our profits are actually not 1.5% fixed. We are actually doing a quite steady amount of like around 3 to 4% on the last few months actually. But the issue is that because we had such a heavy amount of inflation of tokens that's on the market, sort of coming in from other channels and other means in a sense, they are sort of eating away at the profits of where the OG guys are supposed to get. And so we want to make sure that we get those profits up and focus on that. And the next thing would be because once we sort of exit on those merger deals that we're working on, in a sense, we want to also want to ensure that we are able to push back those profits to the OG guys rather than people who sort of come late and then they buy the tokens and they stick in the new pool. So we want to make sure that those who stay with us, you didn't sell, you hold on, you get a proportion to what we are sort of exiting. Because on exits, normally we look at about 3 to 5 times. 3 times is just a conservative amount because that's what you normally would in terms of business. And we want to make sure that those extra profits are moved into and reward the OG guys as well. So we want to make sure that we can account for all ducks in that sense. So for the token users and token holders right now, sit tight. We're still working through in terms of the infrastructure of what we can and cannot do because staking pools are tricky. Limitations are tricky as well. We still are finalizing in terms of our white paper in terms of how we do that, and especially because we are speaking to some VCs now in terms of the structure as we are raising for our development cycles. They also want tokens, so we want to make sure that the inflation, especially from those guys as well, doesn't affect you guys because they want a different exit path and they want a different exit strategy as well. So as we sort of announce things, we believe our price action on our exchange will be better because of our development cycles, and that's where we're sort of heading towards at the end of the day. We're heading towards I would say a big boy game.
Yeah, absolutely. No, and that's good to hear. I was going to ask, how is the company finances? Like, are you going to need to raise more money to kind of reach these goals, or are you bringing enough revenue to function and to do what you guys are doing, or how are kind of the company financials?
Yeah, so essentially, because we are always pushing about 70% to 80% of our profits out back, paying out to everyone, we are very lean in that sense. So in the development cycles, as we grow, we definitely need a larger team, and that means that we obviously need to raise. And the whole initial roadmap plan for us was that we were able to buy enough assets and raise enough to buy enough assets to sort of get us to that cycle where we can fund a little bit of our development cycles, but unfortunately we didn't raise to that level of what we expected. So right now that means that we have to start going towards institutional guys who raise that level of what we're doing. So that's why on the back end we are talking to VCs and we're talking to PEs to sort of head towards that direction, because we are not open up to retails, because I think the issue is that with retails the expectation is a little bit different, and with VCs we hope to get institutional help in that sense. So what this means is that they can start partnering us with maybe Microsoft and bigger boys who so can sort of help us along the journey as well, because especially when you're creating such infrastructure, you need all the help you can get. So that's the direction we started on. We have started since I think March. Yeah, we started this in March. We are on a few talks with a few guys at the last few stages. So we are hopeful, and this process takes time. So if you are also a VC or a private equity, you are interested in sort of coming to the health space, feel free to come to speak to us, and we will let you in terms of how we do our deal flow and our structure in that sense, because it's a whole different structure of how we're doing that.
Okay, no, very good. Love it. So yeah, so if you're a VC watching, they definitely are looking for investors, and I think this is a really powerful business model. They're looking to do some big things. I think that's really cool. What about people who are watching who are not VCs? That's most of my audience are not VCs, I think. And if they're wanting to get involved, they're like, "Hey, I really love this idea. What you're doing. What's the best way for them to kind of get involved and to jump in?"
Yes, so we haven't figured out how we want to open this up to the public, because at the end of the day, when you talk about VCs, they're going to take a stake off the holding company of what we have right now. So we prefer traditional plays like that. So at the end of the day, they will be shares involved and tokens involved for them. So for the normal guys, we're going to start opening up asset pools. So what this means is that we're going to shift towards, we're going to showcase one asset financials, how it does in a sense. We're going to split the profits a little bit more towards the development cycle. So instead of maybe like 70, 80%, we push like 50 to 60% back to everyone. So we sort of move in that direction in that sense, where we start putting up pools of different assets, where how they perform, what they're going to do, and what their projection previously was like. And because so far with all the track records that we have, we are able to push all the assets we have, the profits that they do up 30 to 40%. 37% and 41% was the highest that we did for two of the assets. So we're very confident whatever that we sort of showcase, we're saying, look, these are guys that either in distress or very traditional ones that when we sort of come in and manage and plug in more tech, more TPAs and stuff like that, we are able to turn them into a better profit generating asset. So that means sort of the projections of where we're going. So the pools will sort of move in that direction instead. So we're going to protect and lock in the OG guys with the assets we have now. And we're going to start creating different pools for people who essentially want to own those assets in that sense.
Okay. Yeah. Can you talk a little bit? I think it's really interesting. We've talked about this on previous AMAs, but I just want the people here to kind of hear about it. But can you talk about what you do when you buy one of these assets? You talk about increasing revenue. Can you kind of just go through the process of what you're looking for in these clinics and what you do to increase that revenue?
Yes, for sure. So definitely, because I think we've moved very long. I think maybe it's a good refresher as well. Good that you brought it up. So normally when we buy assets, because GPs are quite undervalued in Southeast Asia as a whole, because of how I would say more of the innovation has not, or not really innovation. what's a good word for it? Capitalism system has not sort of reached
Americanized. Yeah,
this
no, I got it.
this region yet. So a lot of them are running very bread and butter because they're traditional guys. Doctors most of the time don't run their business like businessmen. That's the truth because their patient care comes first at the end of the day. So that would mean that some of them are going to suffer from competition or maybe in a sense of infrastructure lacking in that sense, and they're going to focus more on their care of need. So when we come in a sense, in a more business sense, we are going to start taking over that business aspect where either maybe they don't have an insurance partner where they increase their revenues and their profits. They don't have better warehouse management in terms of medication and consumables, and maybe they don't have enough help or infrastructure to sort of open longer in the sense of the hours, because at the end of the day, patient care is based on walk-ins and need in a sense when you're talking about clinic. So the longer you open, obviously, the more potential you can generate profit in a sense. So this when we come in, we sort of tackle on that three fronts, and this allows us to increase the revenue margins and the verticality in terms of that, because now when we are ordering medication and consumables in a bulk order, we can save a lot of money, from 5 to at least 20% of the cost. When you have insurance players, you increase a new verticality because you start seeing a new influx of different kind of patients. When you start opening up longer hours, you start seeing more I would say emergency cases, because late at night, most often than not, you're not going to rush to a hospital if it's maybe a small cut. When you're talking about minor surgeries and stuff like that, so you're going to go for a clinic first to get a referral letter to a specialist or stuff like that. So this is where the verticality and where the profit generations will sort of come from, and that's why I think us focusing on assets and making that into a pool would be better for everyone.
Yeah, absolutely. And I bet the doctors that a lot of times are probably really excited to partner with you because yeah, from my experience, you have these solopreneurs who are focused on the day-to-day of actually just doing the work, and then they don't have the time or a lot of times the know-how. Like you said, they're doctors, they're not necessarily business people, and they're sometimes not even thinking, well, how can we grow? How can we reach more people? How can we serve the current people better? They're just doctor. I mean, they're just coming and doing their doctor stuff. So
Yeah.
have you found that these people are excited to partner with you and they're like, oh yeah, we would love you to take over the business side and we'll just be doctors? What's been the relationship with the doctors like?
Yes, so my traditional business is in what I normally do, or we already do that in a sense. So those are just clinic management. But what KERC is doing essentially is we're taking over the whole asset. So that means we are able to push the profit. So normally, most often than not, the doctors don't stay because these guys are better worn and tired. Either that, or maybe they want to expand and they stay with us at the end of the day. Because at the end of the day, for us, our key focus is the health records. Being able to own the health records, because at the end of the day, when you go to a clinic, the clinic owns the health records, actually, not you. When you want your health records, you got to go to them and, hey, can I get my latest report, or can I get my scan and stuff like that? And they say, okay, sure, let me give it to you. In that sense, so they own it and they manage it. And most often than not, what we don't realize is hospitals actually already monetize a lot of our health records. So this is where we want to see that I would say giving back power to the everyday guy. So doctors are definitely excited in that sense, who we normally speak to and work with, and some of them are really sort of offering us to do a takeover. But that doesn't mean that we have access to their health records. So with the KERC path, at the end of the day, it's slightly different, and the distressed ones are always happy to sort of have a business aspect come into their business.
Okay, no, very good. Scott had a great question. This was actually something I was going to ask as well. So good timing. Scott, great minds think alike. That's what I'm told. But is there any scenario in which you would have to close a clinic or decide it didn't work out well enough to continue? Have all of your partnerships worked out well? Have there been anywhere, oh, hey, this isn't working? What's kind of been the track record there?
So far for KERC segment, because essentially we are using everyone's funds. We are very careful with the assets that we sort of choose. I want to make sure that the history and the management records are strong. So far, no bad history that. But personally, we did had some one or two that we sort of have to sell off. The good thing about GP clinics is because they are normally quite low on the food chain. So they normally sell at the same price you sort of buy them for. And people were happy to take them off you. And especially when we increase the verticality, most often than not, we are actually able to generate a profit upon selling them. So what this means is because when you start introducing insurance players and you start introducing additional verticality to a clinic, this makes the asset more valuable immediately, because the paperwork, the licensing, these are things that not everyone can do. So even as a new doctor who's coming out, or a person who sort of wants to buy a clinic, you're faced with two options. You want a more traditional segment, because the good ones are not going to sell to you. That's a fact. So whatever's on the market is sort of the ones that are sort of either middle ground, or the one that's sort of distressed or doing okay in a sense. So when we add on those things, we are most often not able to generate a profit on top of what we essentially bought for. Because these things, in a sense of not every insurance player is going to give you their TPA in a sense. You sort of need to know the guys inside. You sort of need to know what you need to add on to your clinic to comply in a sense. And they're not going to tell you what they look for. They're going to say, "Oh no, you don't qualify." But because we have a working relationship with them, this ensures that whenever we apply, we get approved.
Okay, very good. Yeah, no, that makes a lot of sense. You definitely you're buying distressed assets, so that could be a risky proposition if you don't know what you're doing. So no, I love that answer. Let's see. I feel like I had another really good question, but it's not coming to me at the moment. So okay, so let's kind of end with calls to action. So you're wanting to grow the community. What is it that you would like from the audience? What would you like? How can we support you? I'm a big token holder. I put in 60K right at the beginning, right when I went to Malaysia. I got home and I was like, you know what? How can I get in big on this? I love these guys, what they're doing. I love the business model. I love that there's real, not Ponzi-nomics. There's real revenue coming in. They have a big plan that I want to just be a part of. When I meet entrepreneurs, like you got younger entrepreneurs, it's just like, I just want to ride your coattails. You do all the hard work. I'm just going to jump on your back and you bring us to whatever you're going after. So what can we do as a community to kind of support you guys? What would be most helpful?
Yes, so right now we are doing a 3x deal. So what that means is, because we are merging a few of the aesthetic assets that we have, because I have a separate segment where I'm grouping together an aesthetic group to sort of sell off to a listed company. And we essentially are pulling together what KERC funds, the remaining treasury funds we have, to sort of put into an aesthetic asset, because aesthetic clinics are a bit on the higher end rather than GP clinics, because these are more of a luxury treatments and services. They're not sort of on the lower end of the healthcare spectrum. So because of that, we sort of went in faith and we did a payment plan with them to buy a higher end asset clinic. If you joined our Discord, I basically essentially shared two different versions of either we went for the lower end one, which is generating less profits, or the one which we can sort of flip for a higher value. So we went in faith. We essentially sign on for the higher value one, and we are essentially still down about 67K, $67,000, and we are still open for that. It used to be 80 in the last week, but we've essentially people who trickled in, and we believe that people can sort of close that round before the full payment cycle sort of closed out.
Okay, love it. Well, hey, John, I appreciate you coming on, and we should do these every so often. Just since I'm a big holder, I know my community has invested heavily in, and so just doing some updates. Go hop in the KERC Discord, because they do updates on there pretty regularly, and so love what you guys are doing. If there's anything that we can do as a community to support you guys, let us know. If there's anything I can do, getting out some YouTube shorts or some tweets about something just to get eyes on things. But yeah, keep up the good work and keep working hard and keep growing this business, and we'll grow along with you. So we will go ahead and wrap up there. Do you have anything else that you'd like to share with us before we kind of hop off for the day?
Yeah, so definitely this AMA is short. There's a lot of things that we're working on in the background. I'm sorry if it seems disjointed here and there, because I'm trying to condense so much information. In a sense, even the summary, like I've talked about us like I don't know, a couple hundred times with different VCs and people. I was there at Token 2049 as well, just telling people about KERC and getting excited about all of that and the prospects of what we're doing. People there excited as well. So I've condensed whatever that I normally speak into a very, very short span. So apologies for that. I'll probably have more AMAs in the Discord and our Discord, so to go over more questions that you guys sort of have and where we are. But these few weeks we've been busy with sort of finalizing our merger agreements and our underwriting deals. So I've not been there for a bit, but we have mods to sort of help you on that. So hop on down. Happy to have a conversation when I'm there. And yeah, thank you for the support.
Yeah, absolutely. Well, and that's how all good businesses are. Good businesses are moving so quickly and in so many different directions where it's hard to come on and just be like, okay, here's a nice bullet point list of what we're up to. You guys are hustling, and there you see an opportunity. Oh, that was my question I was going to ask earlier. Have you seen much competition in this space, like the bigger players wanting to come buy these distressed assets, like them seeing the opportunity that you guys have stumbled upon and kind of fighting you for some of these distressed assets, or what have you seen there?
Yes, so the market is moving because there was a few roll-ups in Malaysia recently. Is in the sense of what it means is that there was few groups of clinics and assets that sort of went for a listing exit. And when that happens, blood is in the water. A lot of Southeast Asia markets are not consolidated yet in that sense. So there is opportunity here. Like there's gold in a sense that gold rush is coming. So we know there's like 2 or 3 investment banks coming in and start swiping up clinics as well. We've seen them in the market. We've heard feedback from clinic owners like, hey, these guys are offering me way more in a sense because they have their different exit valuation and they have more money to fight us. So we're going to just struggle on our own lane. They are going to be our biggest competitors, but they have a different exit and they have a different pathway of what they want to do. So yes, there is blood in the water here. Big players are coming in, but for me that means it's exciting. That means they know and they are validating me, that saying like, look, opportunity is here, and that's why they're coming. So we just have to be faster.
Yeah, absolutely. Any opportunity to partner with some of these banks and kind of get them on board with the big vision that you guys have, or there is just greed takes over? That's how capitalism works, I suppose. But any chance of that?
Yes, we are speaking to a few of them, and they are negotiating us in terms of how that whole structure will look like, because they are very conservative in terms of what they are looking for. They are looking at timelines and timeframes because when you're talking about investment banks and PEs, they have a time frame to spend the money and get the returns for their holders. So they are not very keen on us sort of having that development cycle because obviously we can't promise them, oh, we're going to be able to finish everything in X amount of time, because their time horizon is a little different than us. So we're sort of negotiating with them and seeing how we can partner maybe on the asset component, but still retain the healthcare records. And so this is part of what I do on a daily basis. So yes, there are talks in terms of that because they see Microsoft doing it. They see actually a lot of big companies sort of doing it, but not in a manner that we're sort of heading towards. So negotiations are still on the table, and these things can take time. And God willing, that we are able to wrap some things up.
Amen. Amen. Well, hey, I appreciate you coming on, giving an update to my community. Go hop in the Discord. I'm leaving a link to the KERC Discord, so go hop in there if you have more questions, just to stay up to date. If this sounds like, hey, this is something I want to jump in on. Again, I threw in 60K, so this was one of my big plays, and so looking forward to the future. So thank you, audience. You guys are amazing. Thanks for coming, sticking with me each and every day, watching all the stuff that we have going on. And John, blessings to you in Malaysia, and thank you so much for hopping on, sharing with us, and keep up the good work.
Thank you.
Awesome. Thank you, everybody. Have a great weekend. Great Memorial Day weekend if you're in the States. Appreciate you guys. God bless.